Hello and welcome to today's 18 Group webinar on strategies, technologies and services for successful corporate actions. My name's Sarah Underwood. I'm an editor at 18 Group and I'll moderate today's webinar. Our expert speakers today are Cynthia Reynes, Vice President of Asset Services at TD Securities, part of TD Prime Services, Dominique Tanner, Head of Content Management at SIX, and Larry Conover, Vice President of Corporate Actions at Fidelity Investments. I'll ask them to introduce themselves in a moment. But first, some information on how you can take part in today's webinar. To the right of the video, you'll see a box for questions and polls. We'll be running 3 polls throughout the webinar, so please do place your answers. It'll be good to hear your opinions. I'll let you know when those are coming up. You also can ask our experts any questions you'd like to using the polls channel in the Slido column to the right of your screen. So ask the questions as you like. We'll try and take them through the webinar. We certainly won't leave them to the end, otherwise we may not answer them at all. So thanks for that. And I'd also like to say that we'll include some statistics on corporate actions automation from a recent survey by SIX, and we'll tell you how you can access that a little bit later in the webinar. So enough of me and back to our speakers. And Cynthia, please introduce yourself and tell us a little bit about your involvement in corporate actions.
Sorry about the dog. I am Cynthia Reynes. I currently work at TD Securities supporting Prime Services, and some of my history is with Deutsche Bank, DTC, and Morgan Stanley.
Excellent. Thank you very much indeed. And coming to you, Dominique.
Yes, thank you, Sarah. And hello, everyone, from my side as well. My name is Dominique Tanner, and I'm heading up the global content management team at SIX Financial Information. We are a financial information provider providing reference data, corporate actions information, pricing information, regulatory and tax data to all market participants.
Lovely. And Larry.
Yes, hi. I'm Larry Conover. I'm with Fidelity Investments. I currently have business and product management responsibilities within our asset servicing division. Been here since 2006 with a couple of the firms previous to that as well, and trying to be active in the industry to try to encourage some legislative changes and best practices in the industry around asset services.
That's great. Thank you. We'll come back to some of that later on. Thanks all. And Cynthia, coming to you first and setting the scene, please would you sort of detail the nature of corporate actions in today's capital markets?
So the nature of today's corporate actions, they're very the majority of the challenges or the complexity of some of these events. The processing still remains an anomaly because you have items that you can't capture everything. You have complexities in events with non-standardization, which could be fixed by working with agents and issuers and counsel. And you also have items where we kind of take a back step. You have more volume in the bankruptcy world, more volume in the SPAC world, and this all is done outside of our depositories, which is absolutely a paperwork challenge, stamp challenge, trying to coordinate signatures. So that's where we see there has to be more coordination between the issuers, agents, and depositories to get these things through these automated systems so that they can be done as typical corporate actions. I think where we automate for plain vanilla, it works fine, but it's all of these things that don't remain standardized. If I give an example of a rights offering, typically you'll look at one right for one common. Then you get into all these with 7 rights for one common, and you don't multiply, you divide. So that type of standardization has to be reviewed and maybe looked at up front. And then the paperwork, that's something, it's a little antique. We have to work with the agents and find out why they still require the paperwork, what's the legalities of it. And that's where I think the complexities come into play. Non-standardization on these type of rights. The SPAC events are done outside of DTC. We're working on solutions. Bankruptcies are still done with paperwork. We're working with agents on some portals possibly. So I think all of that has to come together in order to make these a little less challenging and ready for further automation within our independent brokers.
Thank you. Those are all important issues that we'll touch on later on, I think, in our conversation. But Dominic, looking out there, what do you see in terms of how the corporate actions landscape is looking?
Yes, I mean, I can just echo what Cynthia has already mentioned. Sarah, you have already mentioned the recent survey that we did together with Waters Technology on the kind of state of the art of corporate actions processing, corporate actions automation. And this was one of the issues that was mentioned in that survey as well. The complexities of certain types of events are rising. First and foremost, we have a lot more of income events with choices, i.e. where companies are offering multiple options as a dividend. You can have dividend options in different countries. You can have, currencies. You can have a reinvestment option, for instance, which you need to look at. And those currency options often come with quite complex defaults, So let's say a company in the UK announces a dividend and says you can either have it in sterling, US dollars, or South African rand. But if you are a South African shareholder, your default will be South African rand and not the declared amount in sterling. If you're a UK resident, your default will be sterling, and the rest of the world will have a US dollar default. So this is quite complex of actually managing those corporate actions and processing them correctly. You have to go back to the account holders, await their instructions. If you don't get instructions by the market deadline or by your deadline date, then you have to start to process those default options. So this is really something which we have seen is kind of a big pain point for a lot of companies. And we are probably coming to the challenges, the reasons for that later on in this session today. But what I also wanted to throw in to give a little bit of color on the developments here, I think next to the complexity, there is also the issue of ever increasing volumes of corporate actions that need to be processed. I mean, as I mentioned, we are a data vendor. And I've just looked at our statistics of the last 2 decades. And in the year 2000, we processed just under 600,000 corporate actions, i.e. announcement and had to collect them. Last year, 20 years later, in 2020, we were up to about 9.5 million corporate actions. So the volume has basically increased by 9 million over the 2 decades that we are looking at here. So that, from our point of view, is also an issue. And maybe as a last one, if you take all this together, rising complexity, rising volumes, and the fact that deadlines are getting ever shorter, specifically with non-mandatory corporate actions, where you have choices, where you have options. We see that deadlines are getting shorter and shorter. So market participants don't have a lot of time actually to get instructions out to their account services, to their custodians. So everyone is under more pressure, and it's vital that the information is actually flowing to the participants in a very, very timely manner in that respect.
Okay, let's run a poll here and see what everybody thinks about the challenges. Obviously, we talk a lot about complexity, but let's run an audience poll. And the question is, what are the challenges of corporate actions at your organization? And you have a list in front of you, and you can pick as many as you like. So whilst you're doing that, let me come back to you, Dominique, to talk a little bit about the actual data and data management challenges of corporate actions. Obviously, we talked about the sort of high level complexity. What are the data and data management challenges? And you talked about previous years as well. How has that moved on?
Exactly. I mean, probably coming back again to the survey and what we have learned from the answers, which is very much consistent with what we have seen in previous years. The degree of automation is still quite low. I mean, I'm wondering what the poll will show later on. But in the survey, about 78% of the respondents said that they process less or more than 20% of corporate actions manually and in a non-automated way. And looking at the challenges, almost 50% of respondents actually said that legacy technology was one of the big issues, the big challenges to overcome to increase the automation rates at their end.
Okay. Larry, how do you see as a practitioner the data and data management challenges of corporate actions and cutting through some of the complexity?
Yeah, so as Dominic said, volume's up, and it's just looking at that, it really depends on the type of events, right? So the less complex events and the standard things like some of your fixed income interest payments and your dividend payments, we seem to be getting that data, right? And there's a little bit of difference between getting the data and then how that's actually processed. But I'll probably say that most of the volume that's out there that we're getting when you look at it is coming to us pretty quickly and pretty easily, right? And there's a lot of volume on the dividends, but it is that more complex non-standard events which is where all the time is. And a interesting thing we're seeing is we're actually getting more and more data or better data on voluntary events. It's more the mandatory events that we seem to have some challenges around. And I think a lot of that is bankruptcies that's out there. And there's also a lot with changing terms. So we've actually seen a lot of that as well, particularly on the bankruptcy side, but also in some of the mandatory events. So if they don't have final rates determined, or there's some changes in it, based on how that's going, that data doesn't seem to be flowing as much as the original data that's out there, which causes some problems. And then just trying to look at this more globally. There's also some disconnect between the markets. So we've actually seen some issues, and I'll just throw an example out there where there's an event in Canada, and the Canada regulators are making a ruling on an X date or something like that, but that's not getting into the U.S. in a timely manner, and you start to see different X dates, by the different markets. So it depends on where you're trading to capture that. And then just taking this a step further, when you're looking at processing these things, you also have your custodian or your depository, which is where your shares are held, and what's their requirements that are out there, and if they're even handling it. So we've actually started seeing more things not handled, through your normal means, whether it's DTC in the U.S. or some of your custodians. We're starting to see things like warrants being handled directly by transfer agents, and I think Cynthia mentioned the SPACs, right? So volume is up tremendously in that right now. A lot of that's handled directly with the transfer agents, so that data is not necessarily flowing as smoothly as we would like, and certainly the processing is very much different with that. And then, just one more point I'll make on this, even with the SPACs, is we're even seeing sometimes where some of these events are actually processed or actually announced that don't conform to the marketplace today. So, we're seeing things like 10 a.m. deadlines on an expiration date where you need to get things settled in. So you need to pay attention to that, because if you have customers trading around that and they may actually have shares settling, on an effective date or an expiration date, they're actually not entitled. So you actually have timing issues out there that don't conform to the current market practices.
Okay, excellent. Thank you. Hopefully we'll resolve some of these problems by the end of the webinar, but let's see the poll results if we may. Okay, this is something that Dominic pointed out earlier. And Dominic, would you like to comment on those poll results, please?
Yes, from what I can see so far, just need to move a little bit my window here so I can see the full result. I think that that is pretty much in line with what we have seen in the survey. Not the exact percentage figures, but kind of the relative ranking of the issues. Legacy system, as I mentioned, which leads to manual processing of these event types, which can't be handled by the legacy systems. Coupled, and this is also a very interesting fact, coupled with the shortage of skills, the shortage of experience. I mean, Larry has mentioned it. Larry has mentioned market practice. You know, I mean, Canada is doing something different than the US. There might be different X states. There might be different ways of showing things. Cynthia has talked about rights issues where you have different ratios, you know, between the rights and the shares. So we have to be aware of all these things. And a lot of firms have actually told us they do not have the required experience and skill set to cover all the markets. So that is kind of a learning that we have taken away here as well. Also very important is the standardization issue that really goes into what Larry and Cynthia have already said. There are certain standards out there, but the adherence to standards is not that great today. And there is no real trend to further harmonize the market practice in different markets, and I think that would really help. I mean, there's no point in doing a rights issue one or the other way. There's no advantage for the issuer. You know, you should say, okay, per share, I distribute one right, and then you have a ratio between the right and the new shares. You know, I mean, why do we have to do it in 3 or 4 or 6 different ways globally?
Fair enough. Well, again, we'll come back to some of those things, particularly the standards issues and the complexities later on. But let's run another poll just to see where we are with automation. And this one says, to what extent has your organization automated corporate actions processing? And while you're mulling over that one, and you can only choose one answer this time, let me come back to you, Cynthia. What strategies can be implemented to move on from manual processes to automation, and to what extent will manual intervention remain?
I personally think with the systems that I've seen, you can accomplish, as Larry said, on basic events, vanilla events, dividends, bond interest, your mandatory events that are standardized, and some of your voluntaries, you can probably get to a 90% automation on that from an end-to-end process. But again, because of the lack of standardization, if I give it, you need in particular, I think you need a great security master and a great scrubbing system for the announcement process. That's where you catch the items that require documentation. So if you're not scrubbing the events well, and you don't have a good scrubbing process, an exception process in a rules-based system that points out your differences between domestic and international tax withholding. And to throw something further in there, there's international securities are rule-based. They don't work like U.S. securities. So if you have a rights offering, or you have a warrant, or a tender event in the international markets, each different market is rule-based based on your open fails and deliveries. So they may hold you liable automatically. So that's where the knowledge gap comes in, that if you have somebody who's looking at international corporate action processing, they have to understand how those markets work. And that's familiarizing yourself with it, and familiarizing yourself with the settlement process to know you're not going to be held liable on some rights offering that you were delivering, or some warrant. They deem you in those markets. So that's important to understand the markets, to scrub the events thoroughly. And I think those outliers are the manual processes that reside outside of the depositories. While they can get standardization, as Dominique mentioned, rights offering should be 1-for-1, a number per share. But those other outliers where we're taking a step back in the complexities, class actions, bankruptcies, things done outside of DTC, underlying securities that aren't eligible for the depositories, stricter cutoff times for international depositories, some of the cutoffs at 10 a.m. So making sure we build cushions into that. So I think that we can achieve optimal optimization, but you're always going to have those outliers unless they're worked on with the different depositories, agents, lawyers. I think that area needs some work. And if I give an example, I won't mention names, But some examples are, some of the agent systems are antiquated. They're still processing things manually. Things can be negotiated up front. So if we look at something we had an issue with a couple of years ago with an agent in particular on these mandatory tax reclaims for Israeli tax, there was an event that started probably in like June, but because the Jewish holidays came up, the manual forms were submitted to the Israeli tax authorities. The holidays came up in September. You had people waiting like 6 months for their proceeds. And again, it was all manual. You had to fill out the paperwork. If there was something wrong, went to the ITA. It took months just to kick it back to you. Really a haphazard process. Whereas one of the agents stepped in and developed this portal and said, have your clients upload their paperwork. We have an automatic step process to the ITA, and it worked fantastic. And I think we need to see more of that in conjunction with the agents, working with the depositories, and if they need to update their systems to allow for portals for this paperwork or certifications. And I think that's where we'll get a big bang, where we get some of these other outliers, that we can upload things and do it in an automated fashion.
Okay, thank you. Larry, what would you say there in terms of, moving further towards automation? I think Cynthia's made some very good points. How do you see that?
Yeah. So I think that's the key, moving further, right? So, I think currently right now, there's no way to achieve 100% automation, right? And the reason I say that is when you look at these events, whether it's a dividend event, which has got to be declared by the board of directors, or you have a voluntary event, right now it's a physical document, right? It's a press release, it's a prospectus. So you're automatically introducing interpretation into it. So, there's going to be some manual process involved in that. You also have differences with custodians or depositories or the markets, so you need to account for all of that. So I think the effort is really around trying to automate as much as you can that's out there. I will say that there is some industry efforts around this, and I'm part of the SIFMA corporate actions section. I know Cynthia is as well, and we constantly talk about this, this need for better standards and trying to engage the industry and just create those partnerships and cooperations, and that has helped. So if there's some really complex events, we've actually had, whether it's depository or even transfer agents reach out to say, hey, this is unique. Is this something that can fit into something? Is it something that's not going to work? And we've been able to give some feedback and actually change some offers so that they actually did work. So that's an effort to, from the beginning. If you look at what you can do within your firms, I think Cynthia kind of mentioned some of this, having a good scrubbing tool, having the vendors to get data out there. And I think it's trying to get as much as you can, into SDP. I mean, there's always going to be some outliers out there, and part of that is just, having that awareness or the guidelines around how various custodians and markets actually support these events. You can at least load data and maybe have it trigger an exception for somebody to look at. So as opposed to actually having to enter information, you have information already entered in, but you can look at it for more of exceptions, which does reduce the risk a little bit that's out there, and then just keeping on top of things. So I did mention that one issue in Canada out there. So we're actually getting some feeds out of Canada, and if we see that we don't have anything coming out of FINRA, we're actually sending that to them, and we've actually heard in some cases that's the first they've actually heard from it. But what that does is that triggers data to come in, and then that actually flows into us. So there's some smaller steps you can take to try to get there. I think we're mostly focusing on that 20% that's right now, but we have driven some automation around that, to at least get somewhat and really focus on the true exceptions as opposed to manually entering everything.
Okay, excellent. Deep breath. Can we see the poll results, please? That's very encouraging. Cynthia, what do you think to that?
I think that's fantastic. As I said, I think you can automate up to 90% of these events that are standard. So that's great news to see.
Okay. Anybody else want to comment on that? That's quite surprises me actually that it's that high, but it is very good to see.
Yeah, I'll probably just say that if we're factoring everything, which I've kind of stated before, a lot of our high volume events are pretty much automated. So I'm not surprised that that's high, because I think a lot of us are focusing on that 20-30%.
Okay, excellent. Thank you for voting there. And as I say, if you have any questions for our speakers, do please send them in, and I'll put them to the experts. So coming back to you, Dominic, if we talk about automation, obviously for a lot of our delegates at a certain extent, and to a great extent for many, how can firms ensure the quality and timeliness of corporate actions processing? This has been mentioned earlier in the webinar, and it's becoming, as you mentioned, more and more important.
Exactly. Thank you very much. I think Cynthia and Larry have already alluded to it. Obviously, if you have everything in place, if you have your systems in place, if you have your rules in place that are driving the automation, you have your experts that are working on it. That's all fine and good. That's like a fine-tuned Ferrari engine, maybe if you're really good. But the engine won't move an inch unless you put some fuel in the tank, and the fuel here is actually the data. Data is absolutely key. Cynthia mentioned, and I really like that it has a connection to the securities master file. So your securities master file needs to be really good, needs to really be up to date, etc. And it obviously depends on how good the corporate action data is that you're consuming, probably from various sources. You might be getting data from your sub-custodians, from transfer agents, from data vendors like SIX or others. And the better the data and the more timely the data is that you're already initially getting, the less effort you will have to then scrub, deal with exceptions, and the higher the STP rate at the back end. So I think again, data is key here.
Okay, Cynthia, how do you manage the quality and timeliness? You've mentioned 10 a.m. a few times, and 10 a.m. is quite early to get a lot done.
Manage timeliness by good scrubbing, keep an eye out, making sure we have the right vendor feeds coming in, and getting them out to the clients as fast as possible.
Okay, that's great. Thank you very much.
Some of these you get a lot of fuses. So we have an exception-based system, so we can understand where our short fuses are, look at those notices, prioritize them, and get them out as quickly as possible. I mean, you're still going to get those outliers like the 5-day tenders. That by the time they're released, you're giving your clients 1-day notice, but there's reasons behind that. But again, it's just scrubbing the information and getting it out as fast as possible. And standardization as well. I'll give a good example, and I hate to keep bringing up SPACs, but that's where the volume is now. We have an instance now where we're working with a subcommittee. So you look at a SPAC that has a specific redemption date, and now the withdrawal dates are not aligned. So you can redeem, you have an expiration date. They're done outside of a depository, direct with agents right now. And then you have all sorts of rules around how and when you can withdraw. Now you have a client come to you and say, when can I withdraw? Well, it's not in the notice that's published by an agent. So what do you have to do is go to SEC filings, find the proxy registration statement, find the language surrounding withdrawals. There's like 4 different base rules. You can withdraw up until the meeting date with only the agent approval. You can withdraw up until the meeting date with the company approval. You can withdraw up until the meeting date with the board members' approval. And then you have those early cutoffs that Dominique mentioned, 10 a.m. You get incorrect responses from the agent, that, you can withdraw till 5. So it really is understanding that offer. And like yesterday, I was looking for the withdrawal privilege, and the word was revoked. So I couldn't even do a word search. It took me, who's in the industry 20, 30 years, to maybe a half an hour to look for that language. So again, I think it lies within the scrubbing. You should understand this up front, particularly if you're working on SPACs now, and the withdrawals are a big volume driven base right now. So then have somebody scrub it up front. So the last minute, you're not looking for these details. So that all goes to timeliness of being able to notify your clients of the particulars. I don't think the industry right now on SPACs notifies anyone of the withdrawals because it's not published in an agent's notice. So you really, and you don't have a golden source unless you confirm it with an agent. So there's a lot of drivers there and the complexities that stand behind these that you have to understand as a broker, and then work with your clients as quick as you can when they come in, unless you're against these deadlines and you could miss something.
Fair enough. And as the data volumes rise, the corporate actions rise, you're moving harder and faster, I guess. Yeah. Okay, a couple of audience questions. Coming back to some of the challenges that we saw in our first poll here. And Dominic, can I come to you first? It's about skills. It says acquiring the skills we need to update corporate actions is difficult. Do we need to reskill some of our people? And is that how can we do this?
Yes, probably something that Cynthia and Larry can also allude to. I mean, we actually see it from a data provider's perspective. I mean, we have to collect the corporate action announcements from all the markets globally. I mean, it's not just the US or Canada, it's the whole of Europe, it's the whole of Asia Pacific, South America, Asia Pacific, etc. So we need to have specialists in place that know the local markets quite well, know the differences in the local markets, etc. And I think it is with us. It's a constant matter of kind of training people. It's basically done on the job. I mean, you have probably older, more experienced people that have been working on it for a number of years, and then you probably have more junior people, and they really need to be trained up. You have to ensure that you have a critical mass of people that understand those markets specifically, as we're looking at ever increasing volumes here. So it's kind of a constant effort that needs to be done. Unfortunately, and we have looked around, I mean, it's not something like a course you can book. You know, I mean, one of the big course providers, you can say, oh, corporate action processing Japan, you know. I don't know how the others see it, but that's not something that we found very easy to kind of get external support for training. So what we are doing, we have actually organized this internally. You know, we have specialists that train other people, and then they pass on their know-how. But you really have to make a constant effort to keep up the levels.
Okay, is that your experience too, Larry or Cynthia?
Yeah, I'll comment. I mean, I think the skills are changing, right? So, you know, I mean, especially as you move towards automation. So, I mean, you used to be able to, you're looking at prospectus, you're looking at data. It was more of a data entry. You know, you could almost create templates, you know, for associates to help them train. And, you know, that's really gone as you go into automation and with the complexity that's out there. So you really need people that are more analysts, right? And that are looking at the data. Does something look like it's out of sync? Is it not going to work in one market versus the other, with this custodian versus that custodian, as Dominic outlined? So it's, you know, a lot of it is on the job training, but it's, you know, it's really more focused to that analyst role now, to really take a look at it and try to minimize the risk that's out there.
Thank you both. Thanks very much indeed. And let's move on. Let's talk about standards. It's been, I think, mentioned in every answer to every question so far. So, Larry, the practical role of standards in improving automation and data quality, you know, what can we expect and what standards will be adopted? You've mentioned there are standards out there, but not greatly adopted. How do you see this going, and what would it mean for the industry?
Yeah. So a couple of things, right? So standards really provide a uniform definition of values, right? And probably more importantly, a uniform method of communication, right? So, you know, are you getting the right data, you know, and is it coming to you in a standard way? You know, and if we can get there, right, you're really improving timeliness, right? You know, you're reducing inaccurate, conflicting, or even missing event data, but you're also helping to reduce your investor risk and operational risk within your firm, you know, which can have some big cost savings. So, you know, there's certainly, there's arguments for standards. There's probably no downside to standards that's out there. This is probably a little dated, but back in 2010, there was a survey done with DTC and Swift and the Tower Group that was out there. You know, and they, at the time, they estimated that there's over a $400 million annual cost reduction to the industry, you know, just by having standards. And they also carved out too STP rates. little different than automation, I would say, right? So automation, gives you better performance, but STP is ultimately where you want to go with that. And we saw with the poll that there's high levels of automation, right? But a true STP, we saw, or the survey said that mandatory type events can go from 50% up into the mid 80s, and the voluntary, which I think was more around in the teens, in terms of STP, can probably go to close to over 60%. So that was 11 years ago. There has been some progress, I'll say, across the globe, or at least efforts around this. So if you look at what the Australia did with their stock exchange, so they actually mandated that all ASX listings, have to use ISO 20022 standardized events for announcing corporate actions, right? So these are now delivered seconds to the marketplace. In Hong Kong, they have a pilot group using a new CAMS project that will deliver standardized events via SWIFT as well. And I believe that that's actually going live in Q4 of this year. And then in Europe, they've started with SRD2, so that has created some standardizations. I will say they probably have a way to go to make sure that that's uniform and there's teeth out there with it. But, all of these efforts are really centralized around the issuer, and I think that's where it's going to come down to. And, is there incentive for the issuer, and it's been tried in the US, there was some big efforts in the mid 2000s as well, trying to have that, and it really has to start from the issuer. But, there needs to be some incentive, for that to happen. But if we can get there, and it's going to be a long journey and probably require regulations, it really has to start from the maker of the events, which is really the issuer, so that can drive down into the marketplace.
Okay, Dominic, what would you say there, and how would it improve corporate actions and just the smooth running of the markets? Yeah.
I think it has the potential, and has already proven, as Larry has mentioned, that we can really get a lot of benefits in terms of automation from standardization. Larry has mentioned it. It's the ISO standards like ISO 15022, ISO 20022, which are kind of standards, messaging standards. I mean, you have a corporate action announcement. How is such a message built up? How is it structured? We have uniform data field definitions, what they actually mean, etc. That's all very good, but it needs to be overlaid by this layer of securities market practice. And we know that, obviously, all industry participants know that SWIFT is also managing the securities market practice group. There is a global market practice, but there are, again, as we have seen, a lot of nuances and differences in local market practice. And I think this is, for me, the point where we have to put in a little bit more effort and see whether there is more potential to harmonize certain things. It already starts by interpreting the event type. In one country, you can call it this type of event, and in another country, it's another type, which is not really good for automation, because you build the automation on around the type of event. You have rules, etc. Then that drive the processing of the corporate action, and the more variations you have to capture, the less automation you will achieve. So again, standards, I think, are very different. They have a huge potential. We have seen customers that are getting into the high 80s in terms of STP rates, as Larry has mentioned, using those standards very, very efficiently. But we can still do more, to increase the automation level here.
Okay, fine. Thank you very much indeed. So we've talked about automation standards, many other bits and pieces. So Cynthia, gathering all of that together, what might optimal corporate actions automation look like, and what types of technologies, tools and services could help firms here? I think we've got a way to go, but looking forward a little bit, what would you expect things to look like?
I think you need a coordination around the whole industry. I think there's plenty of vendors and service providers out there that can give you an end-to-end process from announcement to payments. I've actually seen step processes where systems are generated switched for you. They need a supervisory approval, and I've even seen something where it steps through your custodians as well, somebody like DTC. So, and I don't want to give DTC a plug, but I'll give some examples where some of these depositories, like they came out with Claims Connect. So all your claims for corporate actions, dividend and interest, used to all be manual or settled via independent charges via the depository. They came out with Claims Connect. Now you put a claim up, somebody else is matching. It's best practices. So the industry has to know that these tools are out there to utilize as well. So that helps. You're not sending paper claims anymore. But I don't think that everyone is aware of it and that it's publicized enough. So now you have half the people or a quarter of the group using it and the other half not. And many others. I think next year, DTC has some pilot programs and instructions can step to DTC. So I think from the beginning to the end, the automated solutions will be there. And again, it's those outliers where we have to look to the agents and the issuers and get a change in mind to them. But it takes a lot to change those practices. And the industry has to come together. I think Larry, over the years, great work through the industry that he's connected to, where we actually can invoke change by the members of the industry asking for that change. So it's really good to have some of these working groups through many of the industry connections to push for this change. And right now, I think it lies with those outliers as we identify them. Anything that's not standard, anything, in this day and age, why are you going outside of a depository? We've got to understand the reasons why. And I think optimal automation will be better as we get those events standardized and within the systems. Why is something not eligible for a depository? It should be depository eligible. That's how you clear your securities. So those are the outliers we have to look at, which is maybe a good thing. If you're looking at 80% based on that poll automation, I'm going to say the 20% that remains non-automated is the outliers.
Okay, indeed, you're probably right. But yes, I mean, the people who voted really know that. Excellent. Thank you very much. Dominic, what would you say here? Is there any value in some of the techniques and technologies that are being used in other parts of the financial industry in machine learning or anything like that? Or are we too far away from that still?
No, exactly. I actually just want to pick up where Cynthia has left it. I mean, going back to the last 20%, obviously you can't automate everything. You will always have exceptions, but exceptions can either be dealt with by a human, a very skilled, very trained person. Larry referred to these people like the analysts that he needs to look into the exceptions. But what we are seeing more and more in the industry, that you can try to supplement kind of the human experts by AI, specifically machine learning, that can detect patterns in these outliers, probably much better than humans can do, and then learn from these patterns. If they know what the solution is to a certain exception, in a certain market with certain event types, if they see that pattern, they can kick off another automated sub-process, which might be able to rectify maybe the underlying data was wrong, maybe some instructions were wrong, etc. Maybe it was wrongly interpreted, but that happens very often in this particular market. So you can build systems that have the ability to self-correct themselves to a certain extent. So that's something a lot of market participants are looking into to drive the STP rates higher for the remaining 20-30% that they haven't really been properly automated. It can also help with the skills and expertise shortage that we have been looking at. Sorry, that's kind of one technology which is actually quite interesting, and we have seen some encouraging results with that. Another technology which was frequently mentioned is actually cloud and cloud computing. Because today we have the problem that the information in the whole industry is stored in multiple places. So everyone is kind of getting a notification, storing a copy of it, then passing it on, etc. So there are probably hundreds or tens of thousands of copies of a single corporate action dotted around in depositories with investors, etc. And cloud computing can probably help with that. I mean, in an absolute ideal world, there would only be one copy of a corporate action stored somewhere in the cloud. And as and when you need to process it, you access the data, you calculate your with a simple mandatory event, you calculate your entitlements, you feed it back to your bookkeeping system, and all is done. So cloud computing, maybe not on that scale, we're probably decades away from that optimal solution, but cloud computing, at least within a firm, which is only storing now one copy of the corporate action and not having multiple copies in dozens of subsystems. That's something that people are looking into to reduce the redundancy and reduce the possibility of creating non-matching copies, i.e. errors in the copies that are dealing with.
Okay, whilst you were talking about this, since we have a question, so I'm going to put it straight back to you, Dominic, and it asks, you talked a little bit about machine learning. Where can you start with that for corporate actions? Obviously, it's a relatively new technology and technique. Where's a good place to start around corporate actions?
Yes, I mean, it is probably for. We probably have to differentiate whether it's us that is an information provider, or whether it is someone that is actually has to process the corporate action. Yeah. As I said, in the corporate action processing area, the exception handling is basically what people are looking at. Typically, what you have to do, you have to train these systems with examples. So you would basically have, here is a corporate action, and here is what went wrong. Kind of tagging this, bringing the data together, having the information on the corporate action with all the different facets, and then basically saying, look, here we had this particular issue, here we had a wrong X date, here we had this, here we had that actually caused the exception. And if you throw a lot of these training examples at the machine, it can actually derive a strategy itself to deal with these exceptions. Obviously, you have to also tell the system what the resolution of the exception was. So you say, okay, this is corporate action, this went wrong, and this is how you solve it. It's usually done by experts like the analysts that Larry mentioned, that instead of just resolving it, they make a training example out of it and then feed it back into the AI application. I mean, what we are doing on the vendor side, obviously it was mentioned that there is still quite a lot of text messages in our industry. You have to trawl through text to extract some information, and we are looking into the possibility, and we have a prototype running that can extract coded information, like machine readable information from text messages. It's using natural language programming and machine learning techniques to actually do that. And we have found that by using maybe a couple of hundred training examples, you already get quite good results. You can probably extract 80 to 85% of the information from those documents in an automated way, which makes it obviously much faster than having a paid analyst looking at it, taking like 10 minutes to read through it, and then another 15 minutes to key in the data. The system can then do 85% in seconds,
Okay, thank you for that. Okay, we're running shortish of time, but let's just throw up a last audience question, and it's about what sort of business and operational benefits come from automating corporate actions. And while you tick as many boxes as you like, Larry, what are the benefits of getting it right and the penalties of getting it wrong?
Yeah, so first I'll say the true benefit is really to the customer, right? So that they have the information they need to make an informed decision. Many of these actions are not easy to understand, particularly from a retail customer perspective. Getting them set up right, providing information timely allows customers to weigh their situation, and having it easy understood for, it's huge for our customers, both retail and institutional. From a firm perspective, having it timely and accurate reduces risk and liability to the firm. I think the liability is clear. If the firm makes a mistake, often the firm is in a difficult situation when a customer has an issue. Whether that's due to misinterpretation, or even if the transaction goes wrong with the agent or custodian. It does place a lot of emphasis on the firm to correct that. From a penalties perspective, really it's unlimited, unfortunately, right? So, if you have to cover an error, you're subject to market fluctuations, in pricing. If you're looking to purchase or sell shares, if it's global, you have FX implications as well. And even if it's not your fault, sometimes you got to work with the customer, and in many cases, you need to make the customer whole. And there's always a play on whose fault was it? Was there partial fault that was with that? So getting all this right is really critical. There's a joke I often made, but it's not really a joke. But if there's a large event, and I've worked for some large firms as well, right? I probably won't put the firm out of business, with it, but I could probably knock it to its knees, so the whole penalty situation is huge because it's really unlimited liability that's out there, if there's a mistake made.
Okay, let's see the poll results if we may. Okay, so if you get it right, you're doing well from a business and an operational way. And yeah, that looks good. Again, people are very positive about this. It's just fantastic. Okay, let me come to our final question. I'd like to ask you all what guidance you'd give to data practitioners working to improve their organization's corporate actions processing. I think it's very much a summary of what we've talked about so far, and they seem pretty good at it already. So Dominique, would you start here, please?
Yes, as you said, it's probably like a recap of or a short summary of what we have already discussed. I think you should tackle the issues that actually hinder you to achieve higher STP rates or higher automation rates. It can have various, there can be various challenges with that. I mean, a lot of people actually mentioned that legacy technology is an issue. So you have to address that. You have to see whether you can do something about the systems that are using. I know it's always tricky to kind of replace a big back office system with something else, but you can probably plug in other systems, subsystems that do, for instance, scrubbing of corporate actions, that probably can handle ISO messages, Swift messages on the corporate action side, and connect it with your legacy system. So that's one thing. If it's a matter of skills, of expertise, obviously you have to invest in training. If it's a lack of standardization that you're seeing, you have to look at what you can do, whether you can adopt those standards yourself, or at least create standards in-house so that you have like defined standardized processing channels for different types of events. And last but not least, you have to look at your data. You have to have good data because that's core of it. It was mentioned, the securities master, the event data. This is absolutely critical. Do I have the right sources of data? What is the timeliness of the quality that I'm getting? And is there room for improvement? By maybe switching sources, by looking at other options to source corporate action announcements, for instance.
Okay, thank you. Larry, coming to you, what would your advice be?
So a couple things just to build on that, right? So people, right? We've talked about that. There's complexity, and it's important to focus on your teams with that continual training out there. Something we've been trying is, we do have a bunch of experts, right? And when we've looked at training, and I had a course on this, everybody learns differently, right? So one person teaching 3 people, may be successful, but somebody could learn a little bit differently. The other thing that we've talked a little bit about was, you may have people that are subject matter experts, right? But they may not be teachers, right? So, is that the right person to actually be training somebody else, and should there be somebody in the middle? So trying to figure out, the team structure and how they learn and how to train right, is huge to get the basics down, but also the whole life cycle and complexities. Also, technology and systems. I think with the poll that we showed, there's a lot of legacy systems that are out there. Dominic brought up AI. There's some great benefits there, and I kind of look at that as 2 things. One is there's these bots that are out there. They're actually cheap, and if you have a lot of data processing, where you just don't have the systems to load simple things that are out there, and it's a lot of repetitive work. There's some really good bots out there that are pretty cheap and pretty easy to do that provides that repetitive tasking. You have to have good governance around it, but that can be done. And then there's the other side of AI, that I've seen some prototypes. I think there's a little ways to go, but having these AI systems, pull text out or do some analysis, it's at least a way to get a good chunk of data out there that could be analyzed, and just take time away from the analysts of just pulling that data out. And then just lastly is the clients, right? So just to be aware of the latest trends and how that impacts your customers. And, if there are complexities, we talked about SPACs, right? So it's a very manual process. There's things out there, just communicating with them, making sure that they're aware, and just trying to be ahead of, where these corporate actions are and how they're going to impact the clients, and just getting that communication out. It may not be the best, for standards, but if you can play that middle role in there and try to make it easier for your customers, that's going to help.
Thank you. And Cynthia, some final words from you, please, some guidance.
I think I echo Larry, is that as people, even with the greatest automation, you still need that experience. And people have to know where to go for information. And if I stick with domestic events, if you go into DTC systems, there's training on any system you want to use within DTC. There's Smart Track, there's CNS. And what's more important is these industry groups are very important. If you want to evoke change, if you're seeing the same continual issue over and over again, well, there's strength in numbers. So I think it's, understanding you have that voice, that if something is always not processed the correct way, or you disagree with something, then get involved with some of the industry committees where we can invoke change. I think we have out there, if you look at the fails, it's been over a couple of years for the industry, a best practice document on liabilities. And that covers securities lending, it covers fails, but does everybody know what's out there? And if they do, then you wouldn't have, you get these late phone calls in the afternoon, they're not aware of industry standards, and there's a lot of risk involved with that. So I agree. The education of people is important. You have to have those key people that understand the products, that they can step in when there is an issue, and then having a voice with the entire industry, because there is change needed with the agents, depositories. And again, if it's just a handful of people going to the depositories and agents, they're not really hearing the industry voice. So I recommend that, and then just being aware of the complexities, that what makes a deal unique and what you have to handhold.
Okay, thank you. Well, thank you very much indeed. And thank you for sharing your expertise and experience today. Thank you too to SIX for sponsoring today's webinar. It's been an interesting conversation. And if you'd like to know more about the SIX survey that we mentioned, please contact Dominique, and you can see his email address there on your screen at the moment. Meantime, before we close up, we have some exciting news to share with you. Tomorrow, we'll launch a new content service called ESG Insight, dedicated to environmental, social, and governance issues, including data sourcing, data management, metrics, standards, risk reporting, regulation, and all the things that are coming along the track with ESG. It's a very fast-moving area, and we will certainly be on top of it and sharing our knowledge with you. Tomorrow you'll get an email, so if you'd like to sign up, please do, and you can join the channel and see what we're up to. So I hope we'll see you there. Meantime, if you scroll down your screen to additional options, you'll see some webinars that may be of interest to you, and you can register for them today. We'll be covering in the not too distant future some pre-trade sanctions for the buy side, best practices for metadata management, and optimizing analytics. Again, I hope that you'll be on one of those webinars. I'll probably be moderating some of them at least. That said, that's it for today. So thank you again to Cynthia, Dominique and Larry. And thank you to all of you who've taken part in the webinar. Please complete our feedback form, as we're always keen to hear your views and improve our products. Meantime, thanks again and goodbye.